Welcome to the inaugural Profitability Analytics webinar. My name is Larry White, and I'm one of the coordinators of the Profitability Analytics Center of Excellence. This is an overview session of the Profitability Analytics framework, but we will be taking increasingly deeper dives into specific topics in future webinars and discussions. If you have any questions or comments, please feel free to use the chat. I won't be able to look at them until I finish my talk, which will take about 20 minutes. One of the things I'd like you to keep in mind as you listen is topics that particularly interest you, because we're interested in creating development groups of practitioners to further develop areas of profitability analytics with concepts, practices, examples, and case studies. This is a list of the founders and coordinators of the Profitability Analytics Center of Excellence. All are on the presentation today. I might mention that the IMA VP of Research, Rafe Lawson, is on the call today. We keep him and Kip Crumwitty, the IMA Director of Research, closely apprised of our work. These are the work products that have come out of the PACE collaboration so far. We are not affiliated with the Institute of Management Accountants, but all of the PACE directors are longtime dedicated IMA members and believe strongly that it is the organization that best represents and supports management accountants. Now, this simple diagram, while obvious, is the inspiration for profitability analytics and its subject matter. The goal is to ensure management accountants can engage throughout the organization to provide meaningful, timely, and useful internal decision support information. A key term for profitability analytics is internal decision support. The profitability analytics perspective focuses on causality, or cause and effect, which is the basis of the scientific method and logic. We don't feel constrained by accounting rules, though of course tax rules do matter. The focus is on real economic impact, the realities of resources, customers, processes, and markets. Financial planning and analysis functions are the area of many organizations that execute the functions related to profitability analytics. This chart at the bottom shows some substantial differences between typical FP&A and the FP&A function we envision supported by profitability analytics. The Profitability Analytics Model incorporates the traditional elements of ROI, but not necessarily in a traditional way. The organizational strategic planning process is used as a process map for applying profitability analytic concepts. PACE adopts the IMA view that traditional accounting work will diminish as technology takes over routine and rule-driven activities. Profitability analytics seeks a new framework for management accountants to engage across the organization to create information and insights for long-term value creation. We have focused on profitability to date, but recognize that value is an increasingly broad topic, encompassing environmental and social value. We feel the profitability analytics framework can and should be extended to incorporate a wider definition of value in the future. The profitability analytics model consists of three elements: strategy formulation, strategy validation, using causal models and strategy execution, or forecasting and decision making. Strategy formulation establishes the organization's plan for identifying and addressing its markets and for mobilizing its resources to meet the demands anticipated. Causal models employ causality to model the strategy operationally in non-financial quantities and then monetize the revenue and cost and investment implications of the organization's strategy. This validates or causes adaptation of the strategy. Decision-making employs the outputs of causal models, both operational and financial, to provide the organization's decision makers with accurate and relevant information they need to make economically sound decisions. Causal information for decisions, both large and small, throughout the organization will create long-term sustainable value. The next few slides shown here will decompose the high-level model into its components. The Profitability Analytics Model is not a step-by-step process, at least at this point. It represents a guide to how to think about the process to ensure the result is high-quality internal decision support information that management accountants can use to support decision-making throughout the organization, from the C-suite to the shop floor and direct customer contact points. So first, we have strategy formulation. Internal and external data are used to guide the formulation of both market, operational, and investment strategies. A market strategy describes the current and expected conditions and opportunities in the market and the organization's plan to exploit those opportunities and capture value. An operational strategy describes the resources and capabilities available to the organization and how they will be aligned in order to execute the market strategy. An investment strategy for long-term value creation may be the most important part of strategy and will likely define how far into the future the market and operational strategies must look. Investments include both tangible and intangible investments, not just traditional capital investments. Strategy validation is where causality is key. Strategy is a function of expected causality, internal resources and capabilities in coordination with external market forces that cause desired outcomes. The models at this point are primarily non-financial, and the focus is on quantities, capacities, and capabilities that must be achieved. The market model, based on the market strategy, describes the organization's structure and processes to achieve market penetration and sales goals. These processes involve key revenue factors including pricing tactics, capacity management, marketing campaigns, partnerships within channels, and compliance with regulations. The operational model, again based on the operational strategy, lays out the organization's structure and processes to meet anticipated demand, achieve operational excellence, and attain logistical robustness in the supply and delivery process. The investment models identifies new investments, both tangible and intangible, whether expensed or capitalized by traditional accounting, and the capabilities required for the new processes. The second part of strategy validation is about monetization that must reflect quantitative planning. Models must first be built using non-financial quantities, then monetized in a manner that reflects those quantities and supports decision-making. The revenue model incorporates the pricing and volume assumptions. The cost model monetizes the cost of resources and processes for decision-making and operational optimization. Both operational and cost models reflect the functioning of the entire organization. They do not fixate only on product and service costs. Investment at this stage becomes three distinct components. Acquisition, how to acquire or create new capability with financial or internal resources. Capital preservation, how to ensure the capability being consumed by by the operations anticipated can be maintained into the future. This applies to both tangible and intangible assets. And cost of capital, how to ensure long-term investments are yielding a return that factors in the capital outlay or resource outlay. The monetization of processes and resources should reflect forward-looking economic costs and not be limited to costs and expenses as defined and measured by financial accounting processes. Key economic causality concepts explained in the IMA's conceptual framework for managerial costing are essential to building a model that effectively represents actual cost flows in the organization. And finally, but not quite last, strategy execution. Management involves forecasting, planning, and decision-making throughout the organization. Accurate causal models that reflect economic reality are essential to effectively manage the organization toward strategic success. Revenue management involves decisions about product or service configuration, pricing, duration control, resource and capacity assignment, and demand management for customers and channels. Operations management involves process management and adaptation for actual demand, as well as maintaining cost, quality, and timeliness of production or of the services you provide. Resource and investment management involves capital assets, human resources, intellectual property, research and development, and other essential tangible and intangible assets within the organization or being acquired by the organization. Investments must have clear causal connection to the strategic goals and long-term vision of the organization. Causal, monetary, and operational modeling allows strategy execution to most effectively understand and adapt to dynamic, volatile markets. Harvesting results. With decision-making based on causal models that represent the organization's strategy, managers can confidently establish and logically adapt performance measures. Causal models support learning and innovation because the gap between results and projection has been established based on real cause and effect relationships. Understanding a result or a monetary effect is much clearer when you can methodically and logically trace back to an operational cause. And finally, we have strategy evaluation, the return arrow along the bottom. As decisions are made and results are realized, it is critical that management accountants assist management at all levels of the organization understand what worked as expected, what worked better than expected, and what worked worse than planned. This feeds into continuous improvement, organizational learning, decisions to revise strategy and tactics, and the formulation of new strategies. I hope I've given you a better understanding of the Profitability Analytics Model. Admittedly, this was high level and very fast. PACE continues to use the Profitability Analytics Framework to push management accounting into a more prominent role as a business partner. We are evaluating and looking for fields of study and for field studies, from organizations demonstrating excellence to organizations that have problems and need paths to improvement. We also want to continue to engage with customer professional organization. This means customers of management accountants, such as sales and marketing, manufacturing, logistics, boards of directors, and so forth. The question is, what more can management accounting do for them to improve the organization's performance? PACE will continue with monthly webinars digging into increasing depth on profitability analytics topic. Above all, we'd like to engage you in what we're calling development groups to define new ideas, refine current ideas, document and share successes, and even failure stories. Please email us and let us know if you would like to work on one or more of these topics in regular, weekly, bi-weekly, monthly, whatever works, types of meetings. If you're not familiar, we provide regular information on the PACE LinkedIn page in both English and Spanish. We also have the website that's a repository for information and has a forum for discussion. This presentation will be recorded and posted to the website and to the LinkedIn page. I want to one last time push the development groups for profitability analytics. Take a look at those issues. If you're interested in this topic, please let us know what you'd like to talk about, what you'd like to think about, what you'd like to contribute to, and would love to open up a dialogue and expand the work into these topics with your assistance. Now we'll move into the questions. Thank you very much for listening to this part of the presentation.